Every trader's goal is to take a challenge, pass, and go on to receive a massive payout. But the truth is, this very rarely happens. Or 90% of traders fail, not just once, but consistently. And so the question is, what's going on here? Why is this? Why are so many traders that are taking these challenges actually failing? Well, after we looked at the data and with my own experience of trading full-time with these firms for over 2 years, it turns out that traders are just approaching these challenges and these firms completely wrong. I'm going to share with you exactly why that is in this video. I recently came across this tweet online that just absolutely blew my mind. It was both insane and heartbreaking all at once. It was a trader that was saying that he has taken and paid for 31 challenges and has never received a payout. And as a result, he was close to being broke. Now, we're not throwing any hate on this trader. I'm actually super grateful that this trader shared this because there are so many other traders that are also in a similar situation. And it takes courage to admit this and to share it online. So props to him because this video wouldn't be possible without him, and I hope that this is going to help some of you out there. Now, to break down this tweet, it is heartbreaking because it means that at no point after this trader continued to fail challenges did he take a step back, take a bird's eye view, and ask himself, what is actually going on here? Why am I failing? Instead of taking that step back and maybe trying a new strategy or changing things or adapting, this trader continued to double down, continued to sign up for more challenges, and lose more money. And unfortunately, this story is not uncommon. We see it all the time. We see traders sign up for challenges before they're ready, before they're consistent, before they're profitable, and they've really refined their strategy. If you take only one thing away from this video, let it be this. Do not take a challenge. Do not pay for an evaluation until you are consistent, until you are consistently making gains in the market. And that is coming from an evaluation firm. We're telling you, wait until the time is right. To give you a little bit of context, in 2021, I quit my job to finally try and pursue full-time trading. I had never taken a single challenge, but I eventually went on 6 months after quitting my job. I passed 4 $100,000 challenges in a row. I didn't fail a single one. And no, that is not because I am some insane trader. I always say I'm like a 4 out of 10 trader. But the reason that I was able to pass these challenges without failing one is because I only signed up once I knew my edge, once I had a clearly defined trading plan, and once I was consistently profitable. I only signed up for a challenge once I had several weeks in a row of momentum, of ending Friday up more than my account was at on Monday. It's very simple, but that alone, I really think, is a huge contributor to my success and why I passed these challenges without failing a single one, without losing the investment that I put into these challenges. But unfortunately, these challenges and these evaluations and the idea and potential of making money have become so strong and so tantalizing, so attractive, that traders nowadays, unfortunately, have become addicted to risk. When we wanted to look more deeply into the data to understand why traders weren't doing as well as they could be in these evaluations, we tried to determine and figure out why exactly are they failing these challenges. And the numbers were absolutely shocking. It turns out that traders aren't failing just because they're hitting the maximum drawdown level. No, 50% of traders fail because they hit the daily loss limit. That means you are on our 2-step evaluation program. 50% of traders are failing because they are losing more than 5% in a single day. More than 5% in a single day is gambler territory and not trader territory. I know that hurts some feelings, but it's the truth. The good news of this, though, is if you flip the coin on the other side of it, it means that you can very easily be better than 50% of traders. If you want to enter the 10% of traders that make money, remove yourself from the 90% of traders that don't make money, well, you can get pretty close to doing that just by not hitting the daily loss limit, by being risk managed, which in this situation means you're not going to lose more than 5% in a single day. This also brings up the topic of this idea of bankrolling challenges, which I've seen on Twitter, and honestly, it just makes me absolutely furious. If you are bankrolling challenges, meaning if you're going to spend $10,000 on challenges in order to try and make $11,000 in payouts, you are a gambler, you are not a trader. And I think this idea online of doing that, it's toxic, okay? You might disagree with me, but I think it's just totally not the right way to approach these things. When I signed up for my challenges, my number one goal was not to pass. That was my secondary goal. My number one goal was to not lose the money that I invested into this challenge. If I paid $500, my main priority was to not lose that $500. No matter what I did, I needed to make sure that I was going to get it back. And because of that, I was much more risk managed. The main goal wasn't just passing. It's always protect your capital, and then any upside is just gravy. It's just a bonus. Because 50% of traders are failing due to hitting the daily loss limit, I bet that firms that used to have a 30-day time limit on their challenges are seeing no higher pass rates than they did when they had the time limit. And to me, as a trader, that is just heartbreaking. This would completely not be the case if traders were risk managed. If they were risk managed, risking 1% or less per trade, then not having a time limit anymore actually would be massive. It would be a huge game changer. But because traders are trying to pass so quickly, having no time limit, unfortunately, for the majority, simply does not matter. Now that we know these statistics and we know why so many traders are failing, what I like to do is called inversion thinking. This is an idea that was really popularized by Charlie Munger, Warren Buffett's right-hand man. The idea is that we're not actually very good at engineering our success, but we're actually quite good at avoiding failure, at avoiding disaster. So rather than asking yourself, how can we become a successful trader? I prefer to ask myself, what would I need to do in order to guarantee that I never make money from trading, to guarantee that I never pass a challenge? And there's a few very easy answers to that. If I wanted to never pass, I would always guarantee that I would risk too much. I would go 5%, 10% risk per trade. I would also never develop an edge. I would not refine my strategy. I would find something online, pay for a course or two, and I would just go all in and I would strategy hop all the time. I would also sign up for a challenge long before I was consistent, long before I had a trading plan, and long before I had developed my edge. I would, similar to the first point, I would also never manage my risk properly. So maybe I've over-risked when I entered the trade, and then if the trade's going in my favor or against me, I also wouldn't manage that risk accordingly either. Lastly, upon failing, I also would never take a step back, bringing it all the way back to that first trader that we quoted. If I failed, I would sign up right away, take another one. I would never go back, think about what I'm doing, take a broader approach and view on the entire system, on the entire strategy, on the entire implementation of what I am trying to do. I hope that gave you some things to think about, because when I say those, I know that in order for me to succeed, I just need to reverse those. Now we know how to guarantee our failure. So by doing the opposite, it would be unreasonable for us to not achieve success. 50% of traders fail by hitting the daily loss limit. So you can enter the better half by just being risk managed. I think this is the number one reason why traders don't approach prop firms correctly. But if you make those small changes, I'm confident that it could make a huge difference for you. If you made it this far, we appreciate it. We'll see you in the next one. Until then, peace.